Payment Protection Program Loans Frequently Asked Questions FAQs as of April 8th, 2020. The Small Business Administration, SBA, in consultation with the Department of Treasury, intends to provide timely additional guidance to address borrower and lender questions concerning the implementation of the Paycheck Protection Program, PPP, established by Section 1102 of the Coronavirus Aid, Relief, and Economic Security Act, CARES Act, or the Act. This document will be updated on a regular basis. Borrowers and lenders may rely on guidance provided in this document as SBA's interpretation of the CARES Act and the Paycheck Protection Program Interim Final Rule, PPP Interim Final Rule. You can find that item at a link here. The U.S. government will not challenge lender PPP actions that conform to this guidance and to the PPP Interim Final Rule and any subsequent rulemaking in effect at the time. 1. Question. Paragraph 3B3 of the PPP Interim Final Rule states that lenders must confirm the dollar amount of average monthly payroll costs for the preceding calendar year by reviewing the payroll documentation submitted with the borrower's application. Does that require the lender to replicate every borrower's calculation? So note that the idea of the PPP item here, the loan, is to be fairly quick in processing the money. So we're looking at the lender requirements. And also note that when you fill out the application, of course, for a PPP loan, the application is pretty straightforward. It's got one number that's going to be one of the big calculation factors within it. And obviously then the question is, how did you come up to that number and what's the verification in on it? And if you look at this from either the perspective of the lender or the borrower, then this could give you an idea of if you are the borrower, what kind of questions the bank might come back at you with, and what kind of documentation do you need. If you're the lender, then of course your question is, how much verification, what type of verification do I need in this? So obviously that calculation with regards to the payroll is going to be one of the major factors. So answer here, no, providing an accurate calculation. So that means they're not going to reconstruct every basically calculation that's involved in the loan amount. So, that would be a tedious task in many cases. So answer no, providing an accurate calculation of payroll costs is the responsibility of the borrower, and the borrower attests to the accuracy of those calculations on the borrower application form. Lenders are expected to perform a good faith review in a reasonable time of the borrower's calculation and supporting documents concerning average monthly payroll cost. However, for example, minimal review of calculations based on a payroll report by a recognized third-party payroll processor would be reasonable. In addition, as the PPP Interim Final Rule indicates, lenders may rely on borrower representations, including with respect to amounts required to be excluded from payroll costs. If the lender identifies errors in the borrower's calculation or material lack of substantiation of the borrower's supporting documents, the lender should work with the borrower to remedy the issue. 2. Question. Are small business concerns, as defined Section 3 of the Small Business Act 15 USA 632, required to have 500 or fewer employers to be eligible borrowers in the PPP? Answer. No. Small business concerns can be eligible borrowers even if they have more than 500 employees, as long as they satisfy the existing statutory and regulatory definition of a small business concern under Section 3 of the Small Business Act 15 USA 632. A business can qualify if it meets the SBA employee-based or revenue-based size standard corresponding to its primary industry. You can go to this link, which is www.sba.gov/size for the industry size standards. Additionally, a business can qualify for the Paycheck Protection Program as a small business concern if it met both tests in SBA's alternative size standard as of March 27, 2020. 1. Maximum tangible net worth of the business is not more than $15 million, and 2. The average net income after federal income taxes, excluding any carryover losses, of the business for the 2 full fiscal years before the date of the application is not more than $5 million. A business that qualifies as a small business concern under Section 3 of the Small Business Act 15 U.S.A. 632 may truthfully attest to its eligibility for PPP loans on the borrower application form unless otherwise ineligible. Question: does my business have to qualify as a small business concern? Once again, does my business have to qualify as a small business concern as defined in Section 3 of the Small Business Act 15 U.S.C. 632 in order to participate in a PPP? Answer: no. In addition to small business concern, a business is eligible for a PPP loan if the business has 500 or fewer employees whose principal place of residence is in the United States, or the business meets the SBA employee-based size standards for the industry in which it operates, if applicable. Similarly, PPP loans are also available for qualified tax-exempt nonprofit organizations described in Section 501c3 of the Internal Revenue Code IRC, tax-exempt veterans organization described in Section 501c19 of the IRC, and tribal business concerns described in Section 31b2c of the Small Business Act that have 500 or fewer employees whose principal place of residence is in the United States or meet the SBA employee-based size standards for the industry in which they operate. Question: are lenders required to make an independent determination regarding applicability of affiliation rules under 13 CFR 121.301F to borrowers? Answer: no. It is the responsibility of the borrower to determine which entities, if any, are its affiliates and determine the employee headcount of the borrower and its affiliates. Lenders are permitted to rely on borrowers' certification. Question: are borrowers required to apply SBA's affiliation rules under 13 CFR 121.301F? Answer: no. Borrowers must apply the affiliation rules set forth in SBA's Interim Final Rule on affiliation. A borrower must certify on the borrower application form that the borrower is eligible to receive a PPP loan and that the certification means that the borrower is a small business concern as defined in Section 3 of the Small Business Act 15 U.S.C. 632, meets the application SBA employee-based or revenue-based size standard, or meets the tests in SBA's alternative size standard after applying the affiliation rule, if applicable. SBA's existing affiliation exclusions apply to the PPP, including, for example, the exclusion of 13 CFR 121.103B2. Question: the affiliation rule based on ownership, 13 CFR 121.301F1 states SBA will deem a minority shareholder in a business to control the business if the shareholder has the right to prevent a quorum or otherwise block action by the board of directors or shareholders. If a minority shareholder irrevocably gives up those rights, is it still considered to be an affiliation of the business? Answer: no. If a minority shareholder is a business irrevocably waives or relinquishes any existing rights specified under 13 CFR 121.301F1, the minority shareholder would no longer be an affiliate of the business, assuming no other relationship that triggers the affiliation rules. Question: the CARES Act includes from the definition of payroll costs any employee compensation in excess of an annual salary of $100,000. Does that exclusion apply to all employee benefits of monetary value? Answer: no. The exclusion of compensation in excess of $100,000 annually applies only to cash compensation, not to non-cash benefits, including employer contributions to defined benefit or defined contribution retirement plans, payment for the provision of employee benefits consisting of group health care coverage, including insurance premiums, and payment of state and local taxes assessed on compensation. So that's a big question right there that probably provides a lot of clarification. So that's going to be included in the calculation for many businesses. So check that one out. 8. Question. Do PPP loans cover paid sick leave? Answer, yes. PPP loans cover payroll costs, including costs for employee vacation, parental, family, medical, and sick leave. However, CARES Act excludes qualified sick and family leave wages for which a credit is allowed under Section 7001 and 7003 of the Family First Coronavirus Response Act, Public Law 116-127. So note there's going to be some overlap within these two laws. The PPP is looking to forgive the loan, but if you already got basically a credit, which in essence is, not paying already having forgiveness of payroll taxes, then you don't get that doubling up. So that makes sense, although it's a little bit confusing. So you got to see the overlap between those two things here. So 9, question. My small business is a seasonal business whose activity increases from April to June. Considering activity from that period would be more accurate reflection of my business's operations. However, my small business was not fully ramped up on February 15, 2020. Am I still eligible? Answer. In evaluating a borrower's eligibility, a lender may consider whether a seasonal borrower was in operation on February 15, 2020, or for an 8-week period between February 15, 2019 and June 30, 2019. Question. What if the eligible borrower contracts with a third-party payer, such as a payroll provider or a professional employer organization, PEO, to process payroll and report payroll taxes? Answer. SBA recognizes that eligible employers that use PEOs or similar payroll providers are required under some state regulations, laws, to report wage and other data on the employer identification number, EIN, of the PEO or other payroll provider. In this case, payroll documentation provided by the payroll provider that indicates the amount of wages and payroll taxes reported to the IRS by the payroll provider for the borrower's employees will be considered acceptable PPP loan payroll documentation. Relevant information from a Schedule R, Form 941, Allocation Schedule for Aggregate Form 941 filers attached to the PEOs or other payroll providers Form 941 Employer's Qualified Federal Tax Return should be used if it is available. Otherwise, the eligible borrower should obtain a statement from the payroll provider documenting the amount of wages and payroll taxes. In addition, employees of the eligible borrower were not considered employees of the eligible borrower's payroll provider or PEO. Question. May lenders accept signatures from a single individual who is authorized to sign on behalf of the borrower? Answer. Yes. However, the borrower should bear in mind, as the borrower application form indicates, only an authorized representative of the business seeking a loan may sign on behalf of the business. An individual signature as an authorized representative of applicant is a representation to the lender and to the U.S. government that the signer is authorized to make the certification, including with respect to applicant and each owner of 20% or more of the applicant's equity contained in the borrower's application form. So obviously, if you're a business, you want to make sure that you have the loan application that's being signed by someone who can act as an agent of the business, and you want to have the verifications that they can act as an agent of the business. And so lenders may rely on that representation and accept a single individual signatures on that basis. Question. I need to request a loan to support my small business operations in light of the current economic uncertainty. However, I pleaded guilty to a felony crime a very long time ago. Am I still eligible for the PPP? Answer. Yes. Businesses are only ineligible if an owner of 20% or more of the equity of the applicant is presently incarcerated, on probation or parole, subject to an indictment, criminal information arrangement, or other means by which formal criminal charges are brought in any jurisdiction, or within the last 5 years for any felony has been convicted, pleaded guilty, pleaded nolo contendery, been placed in pretrial diversion, or been placed on any form of parole or probation. Question: are lenders permitted to use their own online portals and an electronic form that they create to collect the same information and certifications as the borrower application form in order to complete application of their online portals? Answer: yes. Lenders may use their own online system and a form they establish that asks for the same information using the same language as the borrower application form. Lenders are still required to send the data to SBA using SBA's interface. Question: what time period should borrowers use to determine their number of employees and payroll costs to calculate their maximum loan amounts? Answer: in general, borrowers can calculate their aggregate payroll costs using data either from the previous 12 months or from calendar year 2019. So they have either one here now, previous 12 months or from the calendar year 2019. For seasonal businesses, the applicant may use average monthly payroll for the period between February 15th, 2019 or March 1st, 2019 and June 30th, 2019. An applicant that was not in business from February 15th, 2019 to June 30th, 2019 may use the average monthly payroll cost for the period January 1st, 2020 through February 29th, 2020. Borrowers may use their average employment over the same time period to determine their number of employees for purposes of applying an employee-based size standard. Alternatively, borrowers may elect to use SBA's usual calculation, the average number of employees per period in the 12 completed calendar months prior to the date of the loan application, or the average number of employees for each of the pay periods that the business has been operational if it has not been operational for 12 months. Question: should payments that an eligible borrower made to an independent contractor or sole proprietor be included in calculations of the eligible borrower's payroll costs? Answer: no. Any amounts that an eligible borrower has paid to an independent contractor or sole proprietor should be excluded from the eligible business's payroll costs. However, an independent contractor or sole proprietor will itself be eligible for a loan under the PPP if it satisfies the applicable requirements. Now, there was some confusion with this, and it comes down to some language. Like a lot of actual CPAs and people that were looking at lawyers were actually confused on this. It makes sense that this would be the case, actually, but the language made it seem like, in part, you can include the contractors. But they're saying here no, which does kind of make sense. So if it's payroll, it's payroll. If you're paying the self-employment tax, then you can basically remove it. If not, then you pay the contractors and it wouldn't be included in the payroll. But the contractors themselves, even if they're a Schedule C business, even if they have no employees, even if the sole contractor may themselves be eligible due to the fact that they're basically an employee of themselves and pay Social Security tax, so they may be able to apply then. So number 16, question: how should a borrower account for federal taxes when determining its payroll costs for purposes of the maximum loan amount, allowable uses of a PPP loan, and the amount of a loan that may be forgiven? Answer: under Act, payroll costs are calculated on a gross basis without regard to, i.e., not including subtractions or additions based on federal taxes imposed or withheld, such as employees and employers' share of Federal Insurance Contributions Act, FICA, and income taxes required to be withheld from employees. So we're talking, gross pay here. So and again, this is another one that seems kind of obvious, but there was some items in the law, just the way the law was worded, that it sounded like it might be the net pay, but they're clarifying here gross pay, and that would make sense. So as a result, payroll costs are not reduced by taxes imposed on the employee and required to be withheld by the employer, but payroll costs not include the employer's share of payroll tax. For example, an employee who earned $4,000 per month in gross wages, from which $500 in federal taxes was withheld, would count as $4,000 in payroll costs. The employee would receive $3,500 and $500 would be paid to the federal government. However, employer-side federal payroll taxes imposed on the $4,000 in wages are excluded from payroll costs under the statute. So let's read that one more time. However, the employer-side federal payroll taxes imposed on the $4,000 in wages are excluded from the payroll costs. So let me see if I can break that example down. This is my interpretation of the example for what it's worth here. So if you had the $4,000 and then you withheld $500, the employee gets a net check of the $3,500, and the full amount of what the gross is the $4,000. So you're counting the $4,000. Now there's also an issue that the employer pays payroll taxes that like kind of matches Social Security and Medicare and federal unemployment tax and so on and so forth over and above the gross pay. And that is not something you're including. You're counting the $4,000. You're not counting what goes over the $4,000, include the employer portion of basically the payroll tax, which is Medicare and Social Security typically. Question: I filed or approved a loan application based on the version of the PPP Interim Final Rule published on April 2nd, 2020. Do I need to take any action based on the updated guidance in these frequently asked questions? Answer: no. Borrower and lender may rely on the laws, rules, and guidance available at the time of the relevant application. However, borrowers whose previously submitted loan applications have not yet been processed may revise their application based on clarifications reflected in these FAQs. So you're going to go by the best information you have. You can revise, the calculation, and that would make sense because you would think that the loan application would be in place, and before it gets finalized, you would think that there would be some type of review process, at which point in time you can make any type of reviews or possibly adjust the application. So, question: are PPP loans for existing customers considered new accounts for FinCEN Rule CDD purposes? Are lenders required to collect, certify, or verify beneficial ownership information in accordance with the rule requirement for existing customers? Answer: if the PPP loan is being made to an existing customer and the necessary information was previously verified, you do not need to re-verify the information. And this may be part of the reason that some banks were able to start this process a little bit faster, of course, for customers that were already existing, because they might be able to rely on some information. So back to the text. Furthermore, if federally insured depository institutions and federally insured credit unions eligible to participate in the PPP program have not yet collected beneficial ownership information on existing customers, such institutions do not need to collect and verify beneficial ownership information for those customers applying for new PPP loans unless otherwise indicated by the lender's risk-based approach to BSA compliance. Question: do lenders have to use a promissory note provided by SBA, or may they use their own? Answer: lenders may use their own promissory note or an SBA form of promissory note. Question: the amount of forgiveness of a PPP loan depends on the borrower's payroll costs over an 8-week period. When does that 8-week period begin? So now we're on the forgiveness side. We got the loan side of things. We're hoping the loan can be forgiven if you're the borrower, right? And the question is, when does the time period start here? Answer: the 8-week period begins on the date the lender makes the first disbursement of the PPP loan to the borrower. The lender must make the first disbursement of the loan no later than 10 calendar days from the date of the loan approval.